There is something that people say continually on programs like this. Will we or won't we retest the lows? What are your thoughts on that situation at the moment, Julian?
We actually think that at some point in April you will retest the lows. What we're calling it is a divergent retest, where if you look at the index low around 2191 in the S&P 500, we think a number of indices, a number of stocks will make new lows, but others won't. That's the kind of thing that we're looking for, and it's incredibly painful as the data is today. The way that you can tell when markets start to bottom, and we don't see that concrete yet, is when you get bad news and the market ceases reacting negatively to it. We are not there yet, and today will certainly be a challenge in that regard.
Julian, would you acknowledge something that UBS has acknowledged, though, that the market's elasticity to negative news has been falling in recent weeks? Now, that may not hold true this morning, on a morning where equity futures have gapped lower off the back of initial jobless claims, but does that hold true more broadly over the last several weeks for you, Julian?
No, I actually wouldn't agree with that, because I think what you have to think about, John, is that bear markets have their own very distinct rhythm. So if you look back to last week, we had gotten so incredibly oversold that when you got the first piece of bad news on last week's unemployment claims, which was very, very negative, the market was so oversold that literally it couldn't go down anymore. But we spent those days basically resolving the oversold condition. You got through quarter end rebalance, which was presumably to buy. And now, again, from our point of view, the course of travel over the next several weeks, again, as the news is pretty dour, is likely down. But we still haven't seen that inflection point where a numbness sets in, and that's something we'll be looking for.